right, guys. We're not in the middle of the year. We're not in the middle of the month. We're just in the beginning of January. Oh, we are in the middle of the month. I'm sorry. We're in the middle of the month. Welcome to the I Am Real Estate Show. You're with Ray Smith and Sandra Johnson. Danielle Johnson is off today. She's taking care of the kiddies. And so we're having fun on the day on the show. We have John Spur from Inspired Life Mortgage. John is the CEO and founder of the company. How you doing, John?
I'm good, and I was really confused when you started that intro because I'm like, I just did payroll for the middle of the month. I'm sure we're in the middle of the month.
John also is a part of a company called Inspired Life Group, which is a consortium of different activities and companies associated with the group. Tell us a little bit about that, John.
So in Inspired Life Group, we have Inspired Life Mortgage. We have Inspired Life Chiropractic, which also is acupuncture, massage, and some other modalities. And because I had nothing better to do in the last 2 weeks of the year, I started Inspired Life Home Services, which is small remodel and handyman service. And so we just, as we see a need for something, we continue to try to grow and add companies, and it just made sense to just put it all under one entity, which is the Inspired Life Group.
Yeah.
Because you want us all to be inspired about life.
Pretty much. I am. I love life.
Yeah.
Between Ray and I don't know who loves life more.
I appreciate that, brother.
Well, I have to shout out to you because I was wearing something that was doused in fabric softener yesterday, and my sinuses are killing me. And I just sent you a text and said, hey, could you bring me some stuff? And you guys have the best products that are all natural.
Yeah, yeah.
My wife has spent 17 years hunting and searching and finding the things that we have in our office. And you had asked for our cough drops that we have. And we have what's called Breathe and On Guard, and they're from doTERRA. And we have all the doTERRA products in our office. And it's a great company that sources all of their stuff globally, naturally, and they don't add anything bad to them, and they work extraordinarily well. And so, but Rachel has spent, or Dr. Rachel has spent 15 years of staying on top of the cutting technology that's out there, and we're one of the few practices in town that have technology that's only been out for a few years that works phenomenally well.
Can you tell us a little bit about those technologies? I'd like people to hear about them.
Her favorite machine in the office is called SoftWave, and it is great for shoulder issues, elbows, hips, knees, any type of backs. Yeah. I mean, any type of chronic injury or an old injury from sports is still ailing you, or if you just recently had an injury. She's had a couple of high school volleyball players that landed wrong, sprained their ankles, and came in, and they were back on the court in a week as opposed to 3 or 4 weeks of recovery. So it's technology that came from Germany. It's only been in the States for 3 or 4 years. We had one of the first 100 machines in the country, one of the first machines in Arizona. And before a chiropractor practice could have it, only professional sports teams had it.
Wow.
If a sports team is willing to spend the money on this machine and use it on their players, it works.
Right.
Yeah.
And so it's great technology. Of late, we've been getting a lot of pickleball players. So all the winter visitors are back in town and they're playing pickleball. And I mean, I think it's once a day. One of the girls at the front desk like, "Oh, we just scheduled somebody else with a pickleball elbow injury." And
I used to be tennis elbow, huh?
Yeah, now it's pickleball elbow. But these retired pickleball players are serious.
Wow.
About this game, like very serious.
Yeah. People think that I don't know, what do you call yourself, a pickleballer? People think we do it, and we're like, yeah, no, we're the only people our age that do not do pickleball.
Okay, talk about the software. What else do you have down there?
We have the Hocket, which I'll never be able to tell you what Hocket stands for. I call it the ozone sauna on steroids. It has 10 modalities. We've had great success with treating multiple different things, from Lyme's disease to just recovering quicker from a triathlon and everything in between. Right now, we are running a special that is your initial consultation and initial treatment for $79. That would normally be, I think, $225.
Right.
Just to get people to try it out and see what it can do for them.
I would like to say on the air, and so we have proof, that I would like Dr. Rachel to come on our show and talk to us a little bit about all the things she has in that in her office. You think that'd be possible?
Yeah, I can make that happen.
Okay.
You know, it's important that you get your finances in order so that you can afford to do these great things, you know, and that's a beautiful thing, because I know I've seen Dr. Rachel. I've done the Soft Wave and also the Hocket, and I think it's fabulous. There just aren't a lot of options out there, but insurance doesn't cover that stuff. So that's why you want to get your finances in order, and John's a person that you want to call.
Yes, please.
To do that. So what are you seeing out there on the in the lending world? What are you seeing? Because we feel like the energy that we're feeling out there, and the types of phone calls we're fielding and things like that things are starting to change a little bit.
And well, I mean, I know things have started changing because the Mortgage Daily News reports every week, you know, number of applications, all sorts of different things, but they have reported that mortgage applications are at the highest they've been in the last 6 months. So that's all I need to know, that activity has started, you know, becoming more frequent. I'm getting a lot of phone calls for people that want to buy a home. And the common phone call, or the most common phone call I'm getting is, my rent's going up. I just was notified my rent's going to go up. I've got to buy a house, but I know I have credit issues. And I would say over 50% of the people I've talked to in the last 2 weeks, I know I have some sort of credit issue. And so first thing we do is pull a credit report. And look to see what is the severity of the credit issue. How can we fix it? How long is it going to take to fix it?
Before you start that, it's not that it's maybe an issue, but everything at some point has to fix. It's about time.
It is all about time.
They need to know that it's about time. You just got to have some time to fix these things.
There's going to be credit mistakes that are going to take 7 years. There's going to be credit issues that we could clean up in a matter of a few days. It just depends on what it is and how many there are.
Right.
And do you want to spend money to do it, or do we want to do it in an organic matter where you can take care of it yourself following my directions? The option where you throw money at it, we're going to be able to clean it up a lot quicker, but that can get expensive very quickly. I met with a gal who, she said I was irresponsible, and I have a bunch of collection accounts, and it's a significant number. And she can clean it up herself, but the way the process works and how the credit bureaus limit you to disputing or correcting something on your credit report to only 2 trades at a time, when we do the math, is going to take her about 2 years to get through all the trade lines that she needs to fix, doing 2 a month.
Okay.
And so she's got to decide, does she want to spend the money to expedite that, or does she want to take the time to clean them up over a 2-year period?
Well, when people are, and this, maybe we'll have to come back after the break to answer this question, but when people are starting to look at their credit, do you have any advice as far as going in and looking at their free credit report? How much can they trust some of these apps, whether it's through their bank or other apps that, are on TV?
That's a phenomenal question, and I have, I think, a lot to say on that one.
Okay, well, let's do it when we come back from the break.
Thanks for spending some time this afternoon with us. You are listening to the I Am Real Estate Show on 1030 AM KBOI, The Voice. The I Am Real Estate Show is being brought to you by a bunch of people. One of them is John Spur from Inspired Life. What we didn't get a chance to do, you gave out a lot of information earlier. How do they get a hold of you so they can start relaying this information to you so you can help them out?
The best number to get me at is going to be the office number, 520-247-3610. Or you can get us at the website, which is inspiredlifemortgage.com.
So before we went on break, we were talking a little bit about accessing either your free credit report that you're allowed to get every year, or using apps or the credit scores that are available on, your bank website. What are your thoughts as far as someone, because really I think for a lot of people, the fear of what their credit is probably worse than facing it?
So first things first, the credit score that is used to apply for a credit card is different than the credit score that's used to apply for a mortgage, and it's different than the credit score that's used to get a car loan. Yes, I understand how dumb that is. But that's how it works. the credit reporting apps out there, Credit Karma, the score is going to be close. It's not going to be perfect. My understanding is Credit Karma kind of uses a blend of the different scores. The big thing is the information that's on there, the individual trade line. So your auto loan, you go and look at your auto loan, and it shows that you've made all of your payments on time except for the one in March, but you know you made March's payment on time. That's the stuff that you need to look at in a credit report. You need to look and see, is there somebody on there that you've never borrowed money from? Like, you don't know who this company is. Now, keep in mind that when you go get a Home Depot card, the Home Depot card doesn't report as Home Depot. It's going to report as Synchrony Bank /HD. And so you may see Synchrony Bank and go, I don't have anything with Synchrony Bank, but it could be your Home Depot card
Right.
or your Sam
Right.
Levitt's card or your
Right.
Lowe's card. Synchrony basically owns the world when it comes to that retail sales, branded credit cards. So don't go on high alert because you see a name that you're not sure what it is. You need to investigate it. But it's what's actually in the contents of the report is more important than the credit score. This credit score is just a really dumb number that a computer can look at and go, oh, this person fits here, this person fits here, without having to read the entire report. So I don't think it matters who you get the credit report from, because the content is going to be good. Just you got to review the content and make sure the content's accurate.
That sounds like some great advice there. How often do you recommend that people look at that credit report?
Not as frequently as I do. I look at it every day, but
sounds obsessive to me. But
just
yes.
a little, just a little.
I mean, at an absolute minimum, once a year, I would suggest, if you're able to, and you can afford one of these monthly apps where you can look at it or alert you when there's a change, go that route. If you're not able to or don't want to spend the money on it, at a minimum, take advantage of your once a year free credit report.
When you requesting for a once a year credit report, I remember when I did it, it came in the mail. I guess it comes online now, and you can look at every single line.
Well, if you had an email address or knew how to use technology, Ray,
that should be available online. Now, they don't, when I did it, and it has been some time ago since I've done it, they didn't give you a number, what your credit score number that everybody wants, right? But it did have all of the trade lines like you're talking about and the history.
Well, and I want to get back to everybody focuses on the credit score number, and I don't like focusing on the score. I like to look at what's in the body of your credit, because I know if you're currently delinquent on your credit card and we bring that current, that's probably going to get you 100 points back. I know how many points we can gain by fixing things on the credit report. The score for mortgage the score is only important because it figures out what your loan level pricing adjustments are going to be, and it can affect your interest rate. As long as you have a credit score over 580, you can get a mortgage. In some cases, 550. You're just not going to like the rate. So I would rather look at what's in the body of the credit report and what can we fix quickly.
That makes sense.
Your process in helping people seems to be technology driven, but also personal driven. The reason why I bring that is that you seem to take that cradle to grave concept from the time they call you until they get that home. You're there through the whole process.
Well, I mean, I have countless numbers of borrowers that I've done home 2, 3, 4, 5 in their kids' homes and everything else. But this is, I say it all the time, the mortgage is the largest purchase you're ever going to make in your life. Everybody thinks it's the house, but when you realize you're going to pay 2.5 times the value of the house if you make all the payments on your mortgage, the mortgage is the most expensive thing you'll ever buy. I want to make sure that people understand what they're getting into, but also use my years of expertise to put them in a better position and get them the best possible product and payment that we can get.
When you're looking at credit scores or at credit history, what are the things that someone takes the biggest hit on and that are the hardest to recover from?
Charge-offs. I think charge-offs are actually worse than a bankruptcy. Bankruptcy is a pretty big hit. In the mortgage world, if you got a foreclosure or a notice of default, they also call it an NOD. Those are pretty bad. An isolated missed payment is not going to be the end of the world. When you start showing a pattern of missed payments, that's pretty hard to recover from. Open collections, kind of in that order. But collections are relatively easy to recover from if you get them paid. Funny thing about a collection account, you pay it, your score is going to drop for a month and then go back up. I don't know why it does that. But if you pay an open collection, your credit score is going to go down. The one thing I really suggest is if you have credit issues, don't go out and think you can fix it on your own or start doing stuff
Right.
without talking to somebody. I mean, I have a borrower right now that thought she was doing the right thing by closing all of her accounts. And now she has not had any credit activity for 6 months. And in the mortgage world, that means you have no credit score. No credit score is worse than having a bad credit score. Because at least with a bad credit score, we know you don't pay your bills.
Right.
With no credit score, no credit, we don't know what you do. And so making a decision about your credit that you think might be right or because somebody on the internet said to do this, don't make any decisions without talking to somebody who's actually looked at your credit report and said, okay, let's do this, this, and this, but keep this account open.
Yeah, I think they should call Inspired Life Mortgage. What's that number again?
520-247-3610.
Now, do you help them just as part of your process? I know some lenders will send you out to another third party that there may be a fee to go through that process. How does that work with you?
I don't refer anybody out to third-party credit repair service. I myself, I am not a credit repair service. I've been doing this for over 30 years. I have a very good working knowledge of how credit works, and I guide you through the process. These are the steps I think we should take. I have a lot of tools available to me. I have a tool that I can go in and say, if we pay this off, and pay this off, what's it going to do to the credit score? And then it tells me. And I work with you to get it done. But I'm not a credit repair service, and I can't charge for it.
Okay. With that being said, can you do me a favor? I heard you say something, a charge-off, and I don't really know what that is.
That's where the bank is so tired of not getting you on the phone and you not returning their mail that they just don't even want to deal with it anymore, and they write the debt off. And it will sit on your credit for 7 years. It'll show that you still owe it, but the bank won't let you pay it because they've written it off. It's one of the most difficult ones to recover from.
If they don't pay it up, do you owe taxes on that now?
No.
Oh, wow.
But what they can do is turn it into a judgment and a wage garnishment. So like a charge-off is probably one of the nastiest things that can happen.
Are those typically medical, or does it any industry?
It can be a credit card. It can be an auto loan. It doesn't typically medical.
All right.
You're listening to the I Am Real Estate Show on 10:30 a.m. The Voice. We'll be back with Sandra, Ray, and John. Hi, you're back with the I Am Real Estate Show. If you're looking to buy or sell your home, or if you have any questions concerning real estate, call the Johnson Smith team at Indy Realty. We can be reached at 520-850-1725. That's Sandra's number. 520-904-7711 is my number. And 520-373-6864 is Danielle's number. When you get one of us, you get all of us. We're a team that works together.
We're BOGO. We're buy one, actually get two free, I guess.
I don't even know how you say that.
Go ahead.
I don't want to even try to figure that out. Well, back on the credit. So yeah. I have also kind of had an uptick in phone calls where credit has been part of the talking or topic that we've been on. One was for a co-op. If someone has enough money to purchase a co-op, the way those are structured, you don't actually own your unit, but you own a percentage of the entire building. So part of that process is filling out an application, and they do look at your credit. And so someone who has the funds to pay cash may not actually be able to live there. They may get declined. And then I've had a couple of sellers that are just coming out of forbearance. So I definitely think credit, with the interest rates having gone up and, all the stuff we've been through in the last 6-8 months, it is impacting people.
I mean, I'm hearing it and seeing it every day. Half of my business, for good grief, at least 6 months now, has been cash out refis because people can't afford to make the credit card payments anymore because the credit card rates are 23, 26, 28%.
Wow.
Are those on delinquent cards, or is that just the fee?
That is the rate.
Are you serious?
I've seen one of the gals in our office came to me. She's like, I don't know what happened. Did I do something wrong? I'm like, no, rates have gone up. Her rate on her credit card was 24.99.
Wow.
And she had missed a payment, but her payment for that card quadrupled.
Who did we talk to the other day and was saying that when they, he was a lender, and he was saying when we did this, we were going to jail. When we did it at this
He
rate,
said
we
it
were
was
going,
usury.
yeah, it was usury. And now now that these banks are doing it, no one's having a problem with it. I just started laughing.
Yeah, I mean, every state has a usury rate, but those rates have gone up over the years, and the banks are taking advantage of, the increase in the Fed funds, and they're just cranking up those interest rates. Well, and there's been people have heavily been using credit cards because of inflation and being able to afford to buy things and being able to afford to live. And so I have helped a lot of people get that debt paid off because they were getting to a point where they weren't sure if they're going to miss a credit card payment or not. And that's just something. I go back, if you have the equity in your house, and most people do, let's use the equity to pay off these credit cards, because the 6, 7, or 8% rate on the house is still significantly cheaper than
25
Yeah.
to 32, I think
Yeah.
I saw on something the other day.
And default rates are ugly. If you miss a credit card payment, the rate skyrockets.
Yeah.
How can you skyrocket from 24.99?
The 30s.
I thought there was a limit they're allowed to go.
Once, not if you default. That whole world has changed. The whole credit card world.
Whoa.
Again, that 14,000 page law that Dodd-Frank came up with. There was a lot of good stuff in there, but there's a lot of stuff in there that they didn't. Well, I don't think they ever expected Fed fund rates to skyrocket like they did, and so now it's shot themselves in the foot because the legislation doesn't account for something like this.
I think that it goes back to the value of owning a home and being able to build equity, because I'm sure that no one would take that piece of plastic out of their wallet, or I guess today I should say with
tap pay with your phone.
cell phone. Yeah, and buy something they didn't need if they thought they were going to be paying, close to 30% interest on that item. And so, again, having equity in your home gives you flexibility.
And the other thing of owning a home is it fixes your cost.
It does.
Your rent doesn't go.
Yep.
You have a fixed rate payment, and you have a fixed payment. Your taxes and insurance will fluctuate a little bit,
Mhm.
but there's nobody going to be saying, "Hey, you got to sign a new contract, and you're going to have to pay me $250 more a month."
Nothing's going to
Yep.
be that diverse of a hit.
Yeah, I think for people that are on a fixed income, as you said, with the inflation, I've talked to a senior who was having to use that credit card just to get groceries, and that is a hard thing to recover from, unless you can get some assistance or unless you do have access to equity.
Yep.
So
With that
owning a home is still a great thing, but interest rates have come down.
They have, and rates are back towards where they were end of May, beginning of June, which is significantly better than they were in October, but still,
Right.
Almost double where we were this time, 2022. I think what's going to be really interesting to see is if we make it to and stay at 5% for a good period of time,
Mhm.
because that's in the world of mortgage, like that's a normal rate. That 5.5 is a normal interest rate. We've been conditioned for way too long for stuff in the 4s and under.
Right.
I've seen some people on TikTok. I've even seen some realtors going, "This is how you can get a house at 4.25%." And those rates are there, but the amount of money you're going to pay to get that rate does not make economic sense. And I don't like doing loans that don't make economic sense.
Right.
I like to be able to show you that, yes, I can get you 4.5. This is what you're going to pay to get 4.5.
Right.
This is what 5.75 looks like, and it's not that much a difference in your payment, and then it'll make sense to refi. Part of the problem is
Right.
if you go and spend $8,000 to buy a rate down, and then rates drop, and you can get a quarter lower than what you have, are you really going to want to do that when you spent $8,000 to get where you're at already?
Right. And $8,000 can be used for something else, or you can start building more equity, or start having at least having a saving account.
Right,
You
you
want
can
to have
do
something
a
in your
lot of
account.
things with it, but I don't like doing the equivalent of taking $8,000 and throwing it in a metal can and setting it on fire, which some of these rate buy downs, that's what you're doing.
Those metal cans again. They seem to be causing a lot of issues.
And I know it takes time to sit down with someone and to do that comparison. And walk them through the process, because the easy thing to do is just take their $8,000, right?
Oh, yeah.
That's the easy thing. And I love that you take the time to walk them through that and look at the big picture, because we get so focused on things like, the interest rate or the price, and we don't look at the big picture. So we've talked a lot about people who've waited 2 years and the cost of waiting being so much greater than the cost of buying, even if the terms aren't ideal for you. And so I love that you take the time with them and help them understand the bigger picture.
Yeah, in case you don't know who's here, we have John Spur of Inspired Life. He's the owner and CEO of there. He's also in part of Inspired Life Group, which has Inspired Life Chiropractic, Inspired Life Mortgage, and Inspired Life Home Services. And we'll talk a little bit more about that in the last segment. We're back. You're listening to the I Am Real Estate Show. We're here with John Spur, the CEO and founder of Inspired Life Mortgage. It's also a conglomerate of the Inspired Life Group, which has Inspired Chiropractic and Inspired Home Services as part of their portfolio. What I thought we'd talk about today is, the last segment is, I want to do some 101 on loans and go like, okay, forget conventional loan. Tell me about it.
So you want to talk about a conventional loan?
Yeah. What are the processes? What do you have? What about 20% down? Do you have to have 20% PMI insurance? I'm going to go over each one of those loans, see if you can tell me, so you can tell the people the difference between all of them.
So, I mean, conventional, a lot of time are referred to as Fannie and Freddie. It really, what makes it a Fannie Freddie loan is if you are over or under the maximum loan amount, which is in the $750,000 range. So you have conventional loans that are Fannie Freddie, and you have a conventional loan that would be considered a jumbo loan, anything over that threshold. Okay. They typically require 5% down. There are some first-time home buyer programs within there that you can do 3% down. If you don't do 20% down, you're going to have mortgage insurance, which is basically an add-on to your payment that ensures the lender that if you default, they're going to get a portion of that loan back from the insurance. It's really ensuring the difference between 80% and 100%. So if you did an 85% loan to value, or you only put 15% down, the mortgage insurance is going to insure just that 5%.
Right. And when you get a certain amount of equity, does the PMI insurance go away?
So the mortgage insurance on a conventional loan will drop off, and this is going to sound weird, but when it reaches 78% loan to value through principal and interest payments. What that means is you can't go win
I'm
the
like
lottery.
you guys. My head just spin. I didn't know exactly what he said.
So what they're saying is if you win the lottery, you can't go and put $20,000 on your mortgage and magically be at 78% and it drop off.
Right.
You have to do it through however many payments it takes to get to 78%.
Okay, that's called my convention. Let's talk about FHA loans.
FHA. I got engaged in an internet argument on Facebook about FHA with some other loan officers. And the one thing I've learned, and I've known this my entire life, is just don't argue.
Stay off of Facebook.
Yeah, just don't argue with people on Facebook. But nope, I went down that rabbit hole. Everybody thinks Facebook is for first-time home buyers only or somebody with bad credit. FHA. Sorry. I realized what I said. I'm like, yep, that came out wrong. FHA. And that's just not what it is. That's not why FHA was created. FHA was created to give people access to a home without having to put 20% down. In the 70s and early 80s, if you didn't have 20% down and sometimes 25% down, you couldn't get a house.
Right.
You had to have that much money down. And HUD introduced the FHA program, and it got it to 10% down, and then eventually 5%, and now it's 3.5%. FHA is a great tool for a lot of borrowers, and I don't rule it out for anybody. Anytime I sit down and work with a borrower, I look at conventional, I look at FHA, and then we figure out which one is best for them.
Right.
But it is a government-insured loan. You can get away with as little as 3.5% down. Your down payment can be a gift from a family member, your employer. It can come from a multitude of places. So I think it's a wonderful product, and I use it a lot. But a lot of loan officers don't even look at it if you have more than 5% down, because they've been trained that FHA is only for people with no money down or bad credit.
Okay. USDA. Oh, going back to FHA, what about the PMI insurance?
So on an FHA, it's not called PMI because that's private mortgage insurance. It's just mortgage insurance. You have an upfront premium, which is rolled into the loan amount, and then the mortgage insurance itself is smaller than conventional in most cases, but it's there for the life of the loan. Unless you put 10% down, then it'll drop off at 11 years.
Okay. USDA.
The very little done loan. Yes, the people who certify your beef will also do mortgage loans. Unfortunately, in Arizona in the mid-90s, they redid the map and they pushed the USDA boundaries out so far that it's going to be places like the little pockets of Rancho Cerrito, Corona de Tucson. It's going to be all the way out to Red Rock. And it's 100% financing. It has some unique restrictions like swimming pools, and it can only be a new construction manufactured home. There's a lot of little different caveats on it, but you can get a house with no money down on USDA if you qualify, but it has to be in an area that USDA loans can be done.
We're here with John Spur of Inspired Life Mortgage. He's the owner and CEO of the company. And one more loan, a VA.
A VA loan, my favorite. Most loan officers don't like doing them because they don't understand it, haven't taken the time to understand it. I love the product because there is no gray area with VA. Either you qualify or you don't qualify. There's no underwriter interpretation. Now, to get a VA loan, you have to have veteran benefits, and that's very easy for me to figure out if you have them or not. I have access to the VA system. I need 3 pieces of information from you, and I can tell you if you're eligible to buy a home or not.
I think people understand that most of us who have our DD-214s, we're like, oh, man, I don't know where to get it. How do I get that? You can find the information and find out whether the DD-214 is active and whether it can be used.
I don't even need the DD-214.
Okay.
I know I need name, year of birth, and social security number, and I can tell you if you have if you're eligible or not.
Okay.
VA is 100% financing. There is no loan limit anymore. A lot of people, there's a loan limit. You have to put money down. No, VA got rid of that. If you want to go buy a $2 million house with no money down and you can afford it, go for it. The other thing I like about VA is they don't have debt-to-income ratios. All these programs have a DTI, debt-to-income. VA works off of how much money do you have left over after paying all of your bills. It's, again, my favorite loan because for me it makes sense. It's very easy for the underwriting process, and they have some of the best rates out there, and there's no mortgage insurance.
I'm going to ask you about the mortgage insurance. Okay. And the rates are pretty variable. It's pretty good compared to everyone else. Then.
Oh, yeah, no. VA rates tend to be the lowest rates available.
I think I talked to all my questions I want to talk about.
And one of the things you didn't mention was that credit score. Is there a big difference between qualifying on each of the loan products?
Oh, no. I mean, on any loan product, I don't care what it is. The lower the credit score, the higher the risk. So the higher the risk, the higher the rate or the higher the cost of the loan, one or the other. VA is going to go down to, a 550, FHA 585, 580. Conventional is going to be 620. In some cases, 640. And again, the lower the score, either the higher the cost of getting the loan done or the higher of the interest rate.
Yeah, but we're talking about military loans and VA loans, and also talking about people who are VA veterans. Understand that the Johnson Smith team, and I, Ray Smith, am certified as a military relocation program manager. So it means that I concentrate on military people and getting them at home to understand the different processes and things like that. So working with John would be a great thing you can do with the Johnson Smith team, is having John as your lender and us as your realtor. I thought that being said, is there anything you want to add about how great I am as a realtor?
Yes, Raymond is fabulous as a realtor. I'll tell you what, the military training kicks in because he's a list guy. As soon as you go under contract, he is like all over the list of things that needs to be done. He is setting up inspections, and he's got everything emailed to everyone, and it's where he shines, actually, is knocking out that list of things to do. And so, yeah, you know what? I do think you're a pretty awesome realtor.
I think it's pretty important when you're dealing with this to make sure that everybody's on the same page and that we all have the same meetings, we all have the same timelines, you know what you need. Not only we as realtors know what needs to be done, that you know what needs to be done. So as a team, it's what we always talk about, the Johnson Smith team, and you're our client, you're a team, and we're trying to get you through this process as a team member. Not that we're better than you or you're better than us, but the fact is that if we work together, we can make this process. I'm not going to say seamless. I wasn't going to say the word seamless, but make it less stressful. I think is the best way to put it.
Yeah, we want to be there to, like at every stage of that transaction, we want to be there kind of walking you through to the next step, whatever that is. So.
Yeah. We're coming
but
to
we
that.
do surround ourselves with great people too,
Yes.
which is why you hear us talking about John, even when John's not here.
We do talk
We
about
talk
that.
about John a lot.
I appreciate that.
No, because it's really important to us that the people that we're working with are standing by our side as well. And what I don't want to do is find out, at the end of the transaction that we had a problem we could have handled had we been told about it earlier on. And so I think just having people that you trust working with you is so important. And that is why we not only love Dr. Rachel, but also John. They both will take good care of you. So
You don't like the surprises like I got this morning on a loan closing tomorrow that the borrower was declined for the solar loan and nobody told me?
Ooh, that's the one okay.
Yeah.
Okay.
Oh, that hurts. Can they pay money to instead of qualifying? I know at one time.
Alex, my processor, and I, we spent about 3 hours this morning restructuring and figured it out. And now the question is, are we going to have docs there in time for the title company to allow us to schedule an appointment to get them signed and all of that? But I mean, we came up with a solution, but it's not what I wanted to do for the first 3 hours of my day.
Right. Well, sometimes you have to be the hero, right?
Right.
Yeah, we got about a minute and a half left. I want to talk a little bit about home services and some of the things that you guys are doing for somebody that's looking for someone to help them out with home remodeling. Is that a thing you guys do also?
Yeah, so we just opened Inspired Life Home Services, so it's small remodels and handyman service. We're probably about a week away from being able to completely advertise it and phone number and business cards and everything else. We just got our ROC number. I've ordered the business cards, so on and so forth. But it's something that I have done remodeling for years and years and years of my own. And I have a guy that's been working with me on these projects for 4 or 5 years, and he's great. And we just decided it's time to take the next step and make it a business and go help the people that we want to help.
How do people get a hold of John Spur?
Best number is going to be 520-247-3610, or you can email me at john@theilgroup.com.
And we want to thank all of our sponsors. We have Pioneer Title Agency, Indie Realty, Inspired Life Mortgage, and Rego Pest Prevention. We couldn't do this show without their support, and we actually wouldn't be able to do business without their support. So
Agreed.
be sure to look them up if you need their services.